So what is the best way to capture both growth and income while investing in the NASDAQ 100? Last week we took a look at QYLD versus QQQX, which was an alternative closed-end fund that had a very similar investment style as QYLD, but actually performed better when it comes to overall returns. I had a bunch of people in the comments actually say, hey, have you taken a look at QYLG from Global X? And I said, well, yes, we've looked at QYLG in the past, but not within the context of both QYLD and QQQX. We're going to keep this section brief because I've talked about it in the past, but what are the unique differences between QYLD, QYLG, and QQQX? Remember, QYLD is an all-in on cash flow right now. So this is the NASDAQ 100 covered call ETF. The big deal here is they write call options on the NASDAQ 100 index, which saves investors the time and potential expense of doing so individually. And QYLD writes these call options right at the money to generate the most amount of premium, but it also caps a lot of the upside growth that would be available in the investment. It's a trade-off, cash flow now versus growth later. Okay, then we've got the QQQX, which is the Nuveen NASDAQ 100 Dynamic Overwrite Fund. It's got a lower distribution rate here at 7.46 compared to 12 or 13% with QYLD right now. But instead of writing call options on 100% of the portfolio like QYLD does, instead it writes it varies, but it's between 35 and 75% of the portfolio's equity. As a result, it gives it the opportunity to grow more as well as pay a really healthy distribution amount. And then lastly, we have QYLG, the NASDAQ 100 covered call and growth ETF. The big difference here, very straightforward, very outspoken, is upside potential. They write calls on 50% of the portfolio. This strategy allows investors to capture half the upside potential of the underlying index. So you can see very similar strategies here, but maybe a little bit more balance with both QYLG and QQQX. As customary, I did create a spreadsheet for this video, and we're going to take a deep dive look in the short time frame, unfortunately, that we have available for all three investments, and that is from September of 2020 into present. Let's go ahead and dive into that spreadsheet now, but just as a reminder, if you want access to this spreadsheet and all the spreadsheets I use on the channel, make sure to check out the link down in the description below for the Patreon community, which also includes a private Discord channel. All right, guys, so here's the spreadsheet. We've got QYLD, QQQX, and QYLG. We've got the respective expense ratios, assets under management, the number of different holdings, the price per share, and the current dividend yield. And very similar to the previous video, and just as a quick reminder, we've got a few elements here I want to make sure everyone understands, which is, first off, we have our monthly contributions and we have our lump sum amount. Now, there are three different strategies we're testing. We're testing a monthly contribution strategy starting from $0 and reinvesting all dividends. Then we have a lump sum investment strategy where we are not reinvesting dividends. And furthermore, we are not adding any new money to the portfolio. And then third investment strategy right here is a lump sum investment. We are adding new money to the portfolio every month and we are reinvesting all dividends. And again, as a quick reminder, we are working from September of 2020 to present, which is a very short amount of time, but unfortunately, that's all the time we have available for QYLG. It's still a relatively new investment. And for the strategy, when we are doing a monthly contribution, we are adding $250 a month to the account. And if we're using a lump sum investment strategy, we are starting with $100,000. Again, just as a reminder, I don't expect you as the average Joe out there to have $100,000. Some of you are starting from zero, and that's fine. I'm just starting with $100,000 as a random number just to show what happens when we have a certain amount of money and the investment has to survive on its own without adding new money to it over a specific amount of time. And within each strategy, as we talked about, we're going to have an annual dividend income over the previous trailing 12 months. We're also going to have total dividend income earned over the entire period from September 2020 through present. And then lastly, we'll have our portfolio value. I will talk more in a second about this modified column here because it is relevant with respect to this analysis. All right, let's take a look first off at monthly contributions. So top result here for the annual dividend income is $421 for QYLD, $237.93 for QQQX, and then for QYLG, $582.75. Now you might be thinking to yourself, wait a minute, we just talked about QYLG. It only writes options on half of the portfolio, so how on earth is it possible that we would have more dividend income from QYLG than we would get from QYLD? And that's an excellent question. The truth of the matter is QYLG happened to pay a massive dividend in December of 2021. A big portion of that dividend was a capital gain at the end of the year, which a lot of the Global X funds did. And as a result, it really skewed the data. So what I did I'm going to show you that data with that lump investment there because, it did happen, it's real. But at the same time, I'm also going to include a modified column here. And what that modified column does is it takes in one additional month previous. Okay, so if the most recent payment was in April, we'd go back to May of the previous year. I would instead go back to April, capture a 13th month, and I would exclude December of 2021 from the analysis just to make it more realistic rather than to expect outsized significant payments in December of every year with this investment. So this column right here, modified, like I said, takes that 13th month and it removes December of 2021 to not have that large anomaly. When we do that, we see that the top result is in fact Global X QYLD at $347. Then we've got 237 for QQQX. QYLD is modified as well because they had a large December payment as well, though not as significant as what we saw with QYLG. And then right here, $182.29 for QYLG, which is the lowest of the three investments. Then we've got total dividend income earned right here. We've got QYLD in the lead at $476.04. We've got QQQX at $276.59, and then $610 with QYLG, which does include that large payment in December of 2021. And then overall portfolio value, we've got QYLD at $4,882.99. We've got QQQX at $48.58. and 20 cents, and then QYLG at $4,992.08. So from a portfolio value perspective, QYLG was the top performer in this first investing strategy, and QQQX just didn't perform as well as the others. But the truth of the matter is we're only working with about, 17, 18 months maximum here of data, and we're starting from zero with only $250 a month in contribution. So the data is not going to show a big difference here, even if the investments performed very differently. But when we look at the lump sum and the lump sum plus monthly contributions, I think we're going to see more of a difference between the different investments. All right, let's take a look at lump sum investing, not reinvesting dividends, no new money into the account. So again, this is a lump sum investment of $100,000, and what would the trailing dividend income be for the previous 12 months? We would have $13,261 for QYLD, only $77.83 for QQQX, and then $18,393 for QYLG. Again, this does include that significant large payment. So let's see how things change when we modify the trailing 12 months. So this modified number here, $11,948 for QYLD. We've still got the same $77.83 for QQQX, and then QYLG drastically drops here from 18 down to 67.14 for third place. Total dividends earned, which is not adjusted for that modified payment, would be $20,739 for QYLD, $11,332 for QQQX, and then $21,768 for QYLG. Now, portfolio value. As we expect, QYLD lost money over this 15-16 months. It dropped from $100,000 down to $98,234. QQQX, on the other hand, went up from $100 to $111,928.94. And then third, QYLG at $112,935. So it did outperform here by about $1,000 over QQQX. All right, lastly, we're going to look at lump sum investment plus monthly contributions reinvesting all dividends. All right, without modifying the annual dividend income, we would be at $13,682 for QYLD, $8,021 for QQQX, and then $18,976 for QYLG. However, when we make that modification to the annual trailing 12 months of dividend income, we would be at $12,296 for QYLD, $8,021 for QQQX, and then $6,896 for QYLG. So from an annual dividend income, it's so far as we would expect. QYLD is winning, QQQX is in a solid second place, and QYLG bringing up the rear. Total dividends earned here, again, not adjusted for that large payment in December of 2021. We have $21,215 for QYLD, $11,609 for QQQX, and then $22,378.58 for QYLG. Now again, from a portfolio value perspective, instead of $100,000, we now end up with $103,000 when we're reinvesting dividends now for QYLD. For QQQX, we're at $116,787, and for QYLG, only $112,935. So what we essentially find with these results is QYLD is still a very strong dividend income participant here in this analysis, but QYLG does okay with the dividend income, but its real bread and butter is having a higher portfolio value. Let's take a look at some of the graphs here which kind of portray the data over time. All right, this first graph here is all three investments starting from $0 and reinvesting all dividends. This is strategy number 1. QYLD is in blue, QQQX in yellow, QYLG is in red. You can see here the data is pretty close together for the most part. QQQX at times outperformed during this middle segment right here. At the end though, QYLG was on top. Again, this is portfolio balance. We're looking at lump sum investments as well as a lump sum plus monthly contributions. The light color represents the lump sum alone, whereas the investment plus monthly indicates the lump sum plus monthly contributions and reinvesting all dividends. So we can see here we've got QYLD down here, light green and dark green. The difference there is reinvesting dividends during this time frame up here. Then we've got light red and dark red up here, which represents QQQX as well as QQQX with the lump sum and a monthly contribution. And then lastly, we have QYLG in light blue and QYLG plus monthly in dark blue. And you can see the data from these two investments is very close together the majority of the time. However, at the end of the day, it ends up still in second place. I want to remind you guys, this is not a lot of data. This is just back to September of 2020 through present. Very little time here. It could turn out that the results we looked at could be drastically different over a period of 5 to 10 years. In fact, I would expect that they would be. At the end of the day, you could probably go either way when it comes to investing in QQQX versus QYLG. They're very similar investments, some nuances there, some differences. But the important thing to remember here is that neither one of them is very similar to QYLD, which is definitely all in on cash flow right now. That high dividend yield, that high distribution rate. If you're looking for more of a balance there, or you want to really focus on a high yield that also has really good portfolio appreciation, you've got to respect both QYLG and QQQX. If you like this video, guys, check out this one right over here. It's going to be a great next step for you as you learn more and more about high yield dividend stocks. That's all I got for you guys in this video. Have a great rest of your day, and please continue to stay healthy, both physically and financially. Have a good one.